Like many energy-centric markets across the country, Tulsa saw some good job growth in 2011, but those economic gains are not translating to much progress for the local apartment sector. Welcome to Apartment Market Dynamics from NPF Research. I'm Jay Parsons with your Tulsa update. All in all, 2011 was a big year for the U.S. apartment market, the best year in a decade. But we did have a few markets nationally that did underperform expectations, and Tulsa was one of them. Now, Tulsa did see some good economic progress, as we talked about earlier. 10,200 jobs gained in 2011, and that adds up to an expansion rate of 2.5%. Very solid in the national picture. Tulsa is a big energy market, home to 2 energy companies in the Fortune 500, and that certainly helped. But it didn't really help the apartment market here. Take a look at this occupancy chart, and you can see that occupancy rates have been stuck in the low 90s since 2008 and really haven't improved much. Up 1 point in 2011, but still one of the weakest rates in the country at just 92.5%. That said, we do see very significant variation by product age group. Take a look at this chart here. 94 and 95% occupancy in apartments built in the 2000s, 1990s, and 1980s, but just 90 to 91% in properties from the 70s and earlier. And Tulsa does have a good number of older apartments, and they're just not seeing much progress, and they are really weighing down the overall numbers. And with that being the case, rent growth levels have really been hampered. Take a look at this chart showing annual same-store rent growth by quarter, and you can see that Tulsa has had growth of 2 to 3% year over year in each of the past 6 quarters. Now at 2.9%. Just didn't get any upward momentum like we've seen elsewhere, and rent growth levels have been pretty muted essentially across the board, and not just in those older apartments. And let's wrap it up with a submarket to highlight for you. And as usual for this market, South Tulsa Broken Arrow is the standout. Leads the metro with an occupancy rate of 93.8%, up 1.3 points annually, and also leads with year-over-year rent growth of 4.4%. This is Tulsa's relatively newer and pricier area, so not a surprise to see it on top. Going forward, Tulsa is a market that we expect to do better in 2012, given that the economy is on the up and up. Look for revenue gains in 2012 for the apartment sector to come in closer to the national norms. And that wraps up for Tulsa. So until next time, for Apartment Market Dynamics and NPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.